So in this upcoming topic, let me introduce our moderator to come up on stage to lead this discussions. Let's welcome Raphael Jansa, General Manager, the FinTech Association of Hong Kong. Should we all give a great round of applause and welcome Raphael to come up on stage? And moving on, we have our panelists from PQA Labs, IDA, First Digital, Hastrust, and DFX Labs. So let's welcome Devere, Sebastian, Patricia, Giorgia, and Denny. Let's give them a big round of applause and welcome them on stage. And now I will pass the stage over to you, Raphael.
Pleasure, thank you. Okay, good. Good afternoon, everybody. Thank you so much for joining. I'm really excited to host this panel here. In my daytime job, I run the FinTech Association of Hong Kong, but far more importantly, I'm the moderator for this elusive panel. So it's called Challenges and Possibilities, Stablecoin Issuance and Their Impact on Global Finance. So I'm not sure we go global all the way all the time, but anything of relevance for sure. Maybe we start off a little bit of introduction when we go from Danny starting all the way to Devere. Keep it very simple. Danny, especially you, because everybody knows you already. But also end up everybody of you with the idea, will stablecoins impact global finance within the next 12 months? Yes or no? Just like that.
I'm Danny. Most of you actually saw me talk right now. So I'm the founder and CEO of PQA Labs. We issue US dollar-backed post-quantum stablecoins. And the answer to that is yes.
Hi everybody, my name is Giorgia. I oversee the custody business line at XTrust. XTrust is a licensed custodian and provider of financial services for digital assets, licensed in multiple jurisdictions, and we've been around since 2018, so we've seen a few cycles there. My answer is absolutely yes.
Hello everybody, I am Patricia from IDA. IDA is a new company and we're focused on the stablecoin business, so yes.
Hi, I'm Sebastian Ko. I'm the General Counsel at DFX Labs. We're a deemed to be licensed exchange SFC regulator, and we're part of the Lian Lian Payment Services group. One of our subsidiaries has also got a partnership with RD Technologies in the HKMA stablecoin sandbox. And my answer to your question is definitively yes.
Hello everybody, my name is Devere Bryan. I'm the General Manager at First Digital. First Digital is the issuer of FDUSD, which is a one-to-one backed stablecoin, currently third, fourth globally with a market capitalization between $3 to $4 billion. And with that said, absolutely
yes.
Already is and will do more.
So a little surprised that you all said yes. We're going to get into the reason of why you say yes in a bit, because as you can see, we have stablecoin issuers here, we have custodian here, and an exchange as well. So there will be different layers to that. Now, first part though is, I want to talk about the boring parts, the regulatory situation. Important though, right? Because we need to know the frameworks we're operating in. And of course, as an industry, the industry has come a long way ever since 2019, Facebook, Libra, and DM, and the regulators have caught up quite a bit on multiple fronts. So, you know, maybe I start with you, Devere, right away. So, how do you see the current regulatory landscape evolving for stablecoins? So, maybe obviously we can't go global here, but maybe we go Hong Kong, and maybe also what you see in the US or Europe or other markets of relevance.
Yeah, I think that, you know, right now the regulators are learning. You know, stablecoins have been around for quite a while. You know, the first stablecoin was actually issued out of Hong Kong in 2013. So we've had a bit of time, 11 years, right, to try to figure things out. But I feel that as stablecoins started to infiltrate, you know, the real world, the regulators have started to, you know, take things more seriously. Hence, you now see the HKMA coming out with some structure around, you know, what a stablecoin regulatory environment would look like. The sandbox, you know, I think other people on the panel can talk about their experience in the sandbox a little bit better than me, but for me, I feel like they're just still on the learning curve. What we're doing is trying to showcase them how you can run a stable business and issue a stable coin and show, the difference between a synthetic security, which is, a different type of yield-bearing stablecoin, and then a true stablecoin, which is meant for utility and, eventually allowing, large corporations to utilize as some form of collateral.
Okay. Before we go into the use cases, and by the way, when you say the first stablecoin in Hong Kong 2013, I always say Hong Kong dollar is the first stablecoin, privately issued, backed by the US dollar, or pegged back to the US dollar, and has use cases here. So for me, the Hong Kong dollar is actually the first stablecoin. But before going deeper into this, a little bit more again on the regulatory side. So HexTrust is operating in multiple markets actually. So maybe you can give a little bit, Giorgia, a little bit of your view as to what you see in Hong Kong, maybe in Singapore, or in other parts, and how they shape the stablecoin world.
Sure, absolutely. So first of all, I think from a HexTrust perspective, from the very, very beginning of our journey in 2018, we chose to follow the regulated path. So in a way, we are a kind of fan of regulations, if you will. Well, I guess from our perspective, we really believe that regulations are really needed if we want to achieve adoption of digital assets in general, full stop. We're regulated as custodian, we're regulated as a broker, we're regulated also for issuance out of Dubai. In principle approval in Singapore for digital payment token license. So for us it's normal, and we encourage conversation with regulators so they can, first of all, as Devere said, they can learn. They can learn to relate themselves with a technology that is faster than we've ever seen. And also, they need to relate themselves to the fact that there have been some, unfortunate cases with stablecoins. Let's remember, Terra USD, right? So, obviously, investor protection is paramount, but also nobody can deny that, stablecoin usage is growing at a pace never seen before. Just to give you a few numbers there, market cap is about 170 billions. 70% of that is actually held by one company, Tether. These guys with 125 employees are making more money than Visa, MasterCard, and Goldman Sachs. I think first half of the year, profit was above $5 billion US. So this is just only going to grow because, and we're going to get into use cases a little bit later, but stable coins are useful. They are useful. They enable for programmability of money. In emerging countries, they serve as an alternative to their own currencies. So to wrap this up, we do believe regulation is very important, is needed, we encourage it. Obviously a business enabling regulation, not something that cripples businesses. And we look forward to be part of this journey.
Okay, thank you. Yeah, I think it's important for you guys as well to have a safe framework in which to operate, invest in, et cetera, et cetera. So where I was coming from a little bit is, if I look at in Asia in the regulatory landscape, I see like Singapore and Hong Kong being pro, and India, China taking a little bit more of a, defensive approach there. And there's a lot of that in between. And sometimes it's the capital markets regulator that regulates it, sometimes it's the banking regulator that regulates it, or sometimes both have their fingers in it somehow. If I look at the Bank of International Settlement, for example, whose concern is, or concerned about the financial stability once it has wider adoption, and also transparency on the backing of what's really behind the stablecoin. So with that in mind, I'm thinking, is there a risk of regulatory arbitrage as well happening, and how real is that risk potentially? Maybe Danny, is that something you can take on?
Yeah, I think just a couple, this is a follow-up question to your first one, and I think it's basically where you need to have those kind of regulation to kind of give people, and the user, any user, retail, business user, the level of comfort, level of trust that they can use it. because it's only with regulation, because the way I see stablecoins, it's not really a crypto. I wouldn't even call stablecoin a crypto, right? It's literally, as I in my talk just now, it's you put the money on the blockchain. And you should use it and manage it just like that. So I'm actually thinking, obviously there are different kind of stable coins out there, but the fiat reference one are the ones that actually what we're doing here, right? So they should be managed so that we make sure that all the users are safe. And so that's why when you talk about bank international settlements, when they have different kind of reserve requirement, even HKMA in their latest stablecoin kind of consultation paper has those kind of requirement for it. And ultimately, that's actually for the benefit of everybody. Because at the end of the day, when you have, let's say, 100% reserve, and you're being monitored and regulated that way, you wouldn't have that trouble. It might be a level of the real risk might come from a timing standpoint. So if you look at back, for example, like a Silvergate or SVB, they actually didn't really go down because they have a mismatch in their reserve asset. But actually, if you give them enough time, they don't have to go bankrupt. They actually have enough asset on it, right? Obviously, now that we learned there's a liquidity mismatch, the regulator want to regulate in a way that will make sure that liquidity is very liquid, right? But as long as you kind of manage to that, I actually think stablecoin, as Giorgia said, it's definitely the best tool. It is a killer app on blockchain, no doubt about it.
You guys mentioned market adoption already, so I'm gonna go a little bit into that. But keep in mind that I mentioned that, for example, the BIS is concerned about mass adoption and the lack of transparency and all that. And I think we just heard about market caps and everything. I think the key, and there is use cases. The question is for me was when is the point reached where it goes beyond that? In my role, when I meet tech firms or fintech companies, I always ask two questions. Right? So A, where do your developers sit, and B, how do you pay them? The answer where they sit is like mostly across the world, not so much in Hong Kong, by the way, not so much a dev place here, but they all say they pay them through USD and USDC. For various reasons, right? So that's always for me. Okay, that's what I see as a use case, but I know it's a small subset. So, maybe Patricia, because you also represent a company that is looking into issuing your own stablecoin. What use cases do you see, and what is the point where you say, okay, this is the tipping point where mass adoption can be reached?
So we think that, specifically in the case for Hong Kong, we are a Hong Kong homegrown company. Our strategic partners are actually Hong Kong company as well. So we actually think that, in terms of when you look at, the FX market right now, right? Obviously, the US dollar would be dominant and leading, right? Whereas, if you take a look at the current percentages, USDC, as you said, right? That's dominant at this point in time. But people's needs and people's fundamental biases are going back to their own home currencies. That's what they use in the end. And at the end of the day, it is a product that people have a natural need towards, right? So we actually think that this developing into non-US dollar currencies is a huge opportunity set. As well as if you look at today's inefficiencies when it comes to the FX process, various, global holiday calendars. I used to be, in Treasury, we have a big calendar on the desk, right? Just for you to keep track on. It's digitized, but you still want to flip through it because it's just so inefficient and, non-intuitive. So, at IDEA, we believe that that's, a huge trend, and the usage is going to be quite massive on that side, as well as just general, payments and other types of, fundamental banking products. Yeah.
Okay, Sebastian, maybe a question to you first before Devere. So I'm coming, same question, but if I was to piggyback on what Patricia was saying, by the way, Hong Kong dollar-backed stablecoin. This is not US dollar, Hong Kong dollar-backed stablecoin. I just learned, fantastic. Is it a means of payment? Is it an asset class to invest in stablecoins? Does it depend? Does it have to be one or the other? Can it be both? What is it that you say?
Yeah, I mean, from our perspective, definitely want to see the payment, use case around it. A lot of, I think, the magic of adopting stablecoin and blockchain-based technologies is that it's happening behind the scenes, right? We've seen a lot of, replacement or circumvention of banking networks by using different card companies, for example. Visa's also announced its own tokenization program to help exchanges and other institutions issue their own stablecoin. So there's an infrastructure and payment infrastructure piece to it, whether you're taking over the entire wholesale payment value chain or particular merchant payment stages around this. But at its purest, apart from payment as a trading pair, it's the pure, to me, purest form of RWA, real assets, real world assets. And so the possibility is really limitless. I think to echo to Patricia's point, I think with the contraction of the settlement timing, right, we can really see more global kind of applications. Maybe the overall trade maybe still be USD dominant, but that's definitely enables real-time conversion to local currencies. And from a merchant settlement perspective, that's a huge game changer in our perspective. But let me also just one more point. I think from the 30,000 feet level of looking at stablecoins to looking at maybe the 15,000 feet or lower, there are still a lot of kinks that we need to iron out, right? I think the crypto market moves so fast. It was only like June last year when we saw the USDT depeg, right, due to the Silvergate and other sort of market shocks. So handling the pegging piece, which is so critical to a stablecoin surviving, is so important. And one more is the irony in that USDT is the least regulated, right? It's not regulated at all out of the top 5 or top 10 stablecoins. Yet they have 70% of the market dominance, right, in terms of stablecoins. So, and amongst the top 10 stablecoins, how many of them are single, fiat reference stablecoins? Quite a handful, USD denominated, but there are also commodity-backed. There is also, digital asset-backed ones as well. DAI, right, top third one. So I think there's a lot of kinks that we need to iron out, and before we can see a massive, mainstream adoption of stablecoins.
Yeah, fair.
I was just going to add to the original point around the use case, and you mentioned payroll, and you mentioned developers getting paid in USDT, USDC, FTUSD. One thing that people really may not have so much insight into is the fractionalization of payroll that people choose. And to your point, Sebastian, people may not feel comfortable being paid 100% in stablecoin, but being paid 20%, 30%, especially if you're a contractor, you don't have insurance, you don't have a pension and whatnot. For those people, it gives them an option to take 20, 30% of their income effectively in crypto and then invest that into whatever pension they want to. That pension may be a Bitcoin. You know what I mean? So it gives them that structure, that optionality, and that's a growing trend, not only in emerging markets, but in developed markets where insurance is expensive, and getting onto the ladder is very expensive.
I think in the virtual asset world, I think there's undoubtedly the case for stablecoin, and I want to bring it down from 30 to 15 to actually to zero. I mean, we're Sky 100, we're a couple of 100 meters high, but to this level, and I just want to see. At the end of the day, I want to say, do we really need stablecoin? So, and in the real world, I'm saying this. So, to the example I brought with the developers being paid, I understand when we talk to our members is like, yeah, because once it's in Bulgaria, the other one in Chile, the other one in Nigeria, and the other one in Vietnam. I can't manage. I don't have the treasury system to manage Vietnamese dong, Chilean peso, and the person in Bulgaria doesn't get a US dollar account from his local bank, right? So, and that's the easiest way to get and the fastest way, et cetera, et cetera. So that part I understand, so it's geared towards that. But now if we look at this in the audience perspective, and again from a B2B perspective, I know that JP Morgan and Citi have their own stable coins, they use it internally only for efficiency gains, yeah? So,
Yeah.
but they also haven't figured out yet how to take this beyond their internal systems, and maybe they don't want to, right? So, and that's good for that. Now I'm trying to get into average Joes or our lives and say, okay, where would I need a stable coin? Even for online shopping, would I need a stable coin? I'm not sure. So maybe can you guys break it down for everybody where you say, no, it's not substituting something, it's maybe an adding something or making a better way for a certain type. Yeah.
Just very quickly, for me, I think that as Gloria said, we're right at the beginning of this, right? So people forget, as much as I said, there's been a stable coin out for 11 years, but the transition between Web 2 and Web 3, and wherever we're at now, Web 2.2, whatever it may be, that's gonna be the answer to your question around whether or not we need a stable coin. If the world gets to the point where it's fully Web 3, yes, absolutely, because stablecoin will be that utility, that facility. That's going to create the interoperability option for people, and it'll link those countries you just talked about. Right now, it's emerging, and it's an option. Do you need it? Does the majority of the world require it to run their businesses today? No. But the world is moving towards that direction, and we have to start somewhere.
But can I quickly add, in previous teams, I've worked with colleagues based in Argentina, based in Vietnam, Turkey. I mean, for countries, with volatile currencies or where the banking system, is not as, same as we experience in Hong Kong or in Singapore, I think the perspective is vastly different, right? For them, it's a necessity, right? My colleague in Argentina, his wife had a minor car crash. Just to replace all the car parts, he couldn't source it in one town, and the currency fluctuations means that payment in USDT is a necessity, for them. So I think definitely for those jurisdictions and markets, the case is very clear.
Like that.
Yes, I really agree. First of all, we're really, really early, and I think UX is a major factor here. Once number one, we start making it easy and seamless handling stablecoin paired to exceptional financial products that could be built on top of it. We were just speaking earlier at the lounge, while waiting for the panel. I can hold my USDC in a wallet that gives me 4.7%, right? I don't even have to do anything. Who wouldn't use that? We're just not there yet to explain people what is a wallet, what are the risks connected to it. And for us as a custodian, of course, we do believe that retail wallets ideally should really be custodial to a certain degree. People should not be handling their private keys and really be so much at risk. So when we get to that point where financial products around stablecoins are more mature, to me it's a no-brainer that there's going to be adoption and use cases, especially around that. Up until that point, we're going to be seeing exactly emerging countries, right? Latin America and Africa being the really heavy users of stablecoin.
Yeah, okay, thank you guys. I think it was quite easier for us now to understand. And that I will use my octopus card at 7-Eleven for a little bit longer time, probably going forward. Now, at least 3 of you guys issue your own stablecoin. Now, to each of you, why? Why you do that? Isn't USDC, UST enough? How many stablecoins do we need in the world? So maybe with that, Danny, maybe you give a first defense.
Yeah, I think that's actually literally, other than, again, my talk about why care about post-quantum money, that's actually probably the second most asked question. And a complementary question to that is, do you think this is, fast forward 5 years from now, 10 years from now, do you think it's going to be a stablecoin ecosystem where you have a lot of players, or going to be just a few players? And actually, I'm in the camp that it's going to be a few players. It's only a few players going to win out. Okay, it's not like you, because at the end of the day, if you look at everything we just talked about here in terms of their usages, their use cases, right? You got to understand, stablecoins are application. So a lot of times when it comes to their kind of technical performance, it's actually chain specific. Okay, it's chain dependent. Okay, so and everybody pretty much run the same, right? So it's a matter of what they want to be regulated, like Circle or us, or they want to be, not regulated like Tether, right? And all that stuff. So to me, I think at the end of the day, it's the stablecoin that has unique advantage. For whatever the distinct and unique advantage is, will win out. So for example, I see Tether stakes. I mean, they're just too huge. Okay, they already got, and a lot of use cases that Giorgia and Sebastian, Devere talked about, those people who use stablecoin, they will love Tether. It's fast, it's cheap, it's everywhere, right? There's no reason for them to move away as far as those people, those kind of users, right? And if you look at Circle, I think, depending on how the election is, I don't want to do, not political, but I think, US is not going towards CBDC, but they want to have something, a domination in the stablecoin market. So USDC is going to be that representation. So they got a set, right? FD, they got the biggest partner out there to work with them. Well, you can't beat that, right? So each of them has its own advantage. And for us, just a little bit to kind of blow my own trumpet, right? We have a technological, at PQA Lab, we have a technological, advantage and a niche that by literally using our stablecoin, US dollar backed, you use it how you like to use, just like Tether and Circle, but we're quantum resistant, as in you don't have to worry about when quantum computer comes. It's a worry-free peace of mind solutions. So I think those kind of things will win out. Yeah.
Yeah, and I think there is room, right? So we've said it a few times already today. We're at the beginning of this journey. I look back and I think to 2015, 16, when it was kind of the virtual banking boom. And lots of virtual banks turned up. I think there were about 25 virtual banks at one time in Australia. And now there are about 6 or 7 that are still there, still working. And those are the guys that really stuck to the principles of compliance, structure, didn't try to give the house away and be gimmicky. And to your point, actually, having a strong partnership is critical for success. A mint can only do so much. They need a bank, right, for the consumers to utilize and hold the money. So for us, it's the same thing. Our focus has been to strengthen our partnerships and to build, our deployment strategy for distribution. But there's plenty of room. I was on a panel recently where we talked about this having been the stablecoin summer. So many new stablecoins came out, but not all of those are really stablecoins, in my opinion.
Okay. Before I get to you, Patricia, to Danny's point, in 10 years' time, few players out there or many players?
Few. I think that we're going to be in a position where, I think in 10 years' time we'll have a clear distinction between stablecoins and synthetic securities. And synthetic securities which deliver yield will be something consumers can invest in and hold, like another type of security. A stablecoin will be something that people like institutions, accounting firms can hold as like a real asset and have, as a form of collateral.
So you're more in the asset side than the means of payment side, or both? Both. Okay.
Yeah.
So to your question, actually, our view is that it actually can accommodate not infinity many, but quite a number of players can coexist, and find their own niche. The way that we think about it is that, I think everyone in the market recognizes, echoes the importance of the use case, the ecosystem, and you can't do it all alone, right? There has to be some space that, some angle, some country, certain corridors, certain customer segmentation that, different companies are just, attacking. I think it's actually more important as an industry for us to ensure that from a security perspective, from a compliance perspective, that, you know, we don't have bad apples, right? You know, and I think that kind of echoes back into the regulatory side of things. You know, if everybody plays well, then, you know, I think the whole industry and everybody can move forward.
Okay, great, thank you. So my next point I want to touch on is integration / interoperability. Yeah. So we already have assets, we already have currencies or means of payments. Now comes stablecoin along. So in an island, how is interoperability? How important is that? Are we talking new rails completely? Is it a completely new asset class? Does there need to be interoperability in the first place? Maybe Giorgia, this is something you can take as a custodian.
Sure, of course. Well, Danny mentioned earlier about, you know, the fact that stablecoins, like all digital assets, are chain specific, and that's a massive pain. Right? There are just so many stablecoins. You know, there's layer 1s, layer 2s, layer 3s, layer 0s. You know, the
integration layers on top of it.
Integration layers on top of it. And there could be many different reasons why you want to build a stable coin in one chain versus another. Maybe you want it to be highly composable within a DeFi ecosystems. That means probably Ethereum is where you want to go. At the moment, it's still the largest ecosystem. But maybe you want to, you know, favor really, really low gas fees. Then you're going to go perhaps somewhere else, right? I think from a custody perspective, I think what's important for adoption of stablecoin is that those who ultimately reach the many, so, you know, payments providers, you know, of course the banking system, they need to open up, and obviously payments providers are much more advanced than banks. Banks just take their time and are obviously very risk adverse, and they don't really probably even see how they can make money out of it, perhaps. That's also that point. How to relate to the risk connected to it. It's a lot to take in and, you know, elaborate. But what we offer, of course, is infrastructure, right? So we believe that, you know, integration and working with the traditional partners, let's say, to have this similar integration is what is ultimately going to enable stable coins to grow. Until we are there, and again, usability is king. Right? It needs to be ultimately very user-friendly, secure, risk-free, compliant, absolutely. So this is what we do, right? As a custodian, we build that rails. We try to work with traditional partners to educate them, number one. Once we've convinced them, then integrate with their system that sometimes can be legacy, right? So let's remember, trying to tell them, hey, you need to jump into this because this is the future, may also mean for them a huge investment in really rethinking and revisiting all of their possibly really legacy systems, right? So I think this is one actually of the main challenges of adoption. Mm-hmm. That gap that needs to be bridged between the most common rails that everyday people use to make payments and the rails of the future. And we hope to bridge the gap, but there is a bit of work to do still.
That's exactly the point I was coming from, that if mass adoption will only happen not overnight, right? So that's why the integration is important, where the users can see, oh, that's how I actually can turn whatever currency or assets I have into that stable coin for this and that purpose, right? So that has to be floating. And maybe Sebastian, to you, and I'm coming from you can add your part, but additionally to that, maybe, if you all invest then in all these integrations and you all tell me there will only be fewer left later on, why we do all this integration thing then?
Look, I think, you know, I want to first, you know, draw on 2 points of the previous discussions. I think in terms of interconnection or interoperability at different layers, right? There's different challenges associated with that. 2 in particular is, you know, in terms of technical and operational interoperability, you know, connection with the DeFi system, right? The DeFi rails is you know, a no-brainer, right? Because there's a lot of technical developments there already. But from a regulatory compliance point of view, a lot of jurisdictions still don't know really how to handle DeFi. right? The EU has taken a one-year moratorium to really study, how they should be regulating DeFi, for example. How do we apply, transaction monitoring and all these other rules, travel rules to DeFi system is a headache for a lot of regulated entities. The other part in terms of layer of interoperability is the banking rails. It's so important, particularly for stablecoins, right? And we can look at, for example, how open banking, you remember that from the FinTech, like 10 years ago, 15 years ago, how well that has gone around the world. I think, but for the UK and Australia, who has really opened up, open banking, and that's given rise to like Revolut and a bunch of really fantastic FinTech and virtual banks. Otherwise, in every other jurisdiction, including the US and elsewhere, this has not gone very well. And open banking, is really a cornerstone for Web3 type of payment and payment networks that can really flourish. So the banking holdout, right? It's something that we have to negotiate as an industry. How will that look like going forward? I mean, there are Web3 initiatives, such as those championed like Project Ensemble with the HKMA, for example, which are really including banks into the conversation. But yet I still see parallel conversations between true crypto native world as well as the TradFi Web3 world.
Yeah, I think open banking is key, and unfortunately in Hong Kong we have not that level yet on open banking as we should have, and we know the HKMA is on that. But since you dodged my bullet a little bit, I gave the bullet to Devere. So integration, interoperability is key to you, and you're a stablecoin as well. So to my point, yeah, if you do, are you selectively looking into this integration or interoperability? Because if you also believe only few will be left, what's the return on investment if you spend all that money on and then you will take it back?
You asked around 10 years, right? And I used exactly the same reference that Sebastian did around open banking, virtual banks, right? We lived through that, and we've seen kind of the cream rose to the top and stayed there, and some others sank. One of the big things people need to realize as well around the stablecoin monetary structure is that it's highly dependent on rates. So we've just seen, Gloria just mentioned the rates changed a little bit, recently, so people are making a little bit less. Now, over the next 10 years, likelihood is rates will go down, people's revenue will go down, and if they haven't been operating efficiently, they will go down. So that's that. The other piece around interoperability, I would say, for us, we're looking at things that have already got a clear kind of pathway. You talk about interoperability, so I would look at cross-border payments, cross-border remittance as being a perfect opportunity for us to test that out with stablecoins, right? We know that there's a use case there. We know people complain about the SWIFT network being slow and clunky. There's an opportunity for us to trial that with, new kind of modern thinking businesses that could utilize a stablecoin as an adoption, venue, as an option outside of SWIFT. So we look at that as somewhere we can get in reasonably early and trial out the interoperability between countries as well as interoperability between companies within those countries.
All right, so then the investment is a right to play, so to say, and keep growing and with it. With that in mind, in terms of outlook for stablecoins, be it in Hong Kong or even beyond, maybe Danny, starting with you, what is your prediction in the market for the next 10 years or so? And then also, what are the next, let's say, milestones we have to be aware of, be it here in Hong Kong or in general in the market?
Sure, I think, so our team obviously we're based in Hong Kong, but unlike Patricia, we're actually start to use a US dollar-backed version. And I think that has to tap a little bit on the fact that Hong Kong is, one of the older slogans, so it's Asia's world city, right? So I actually feel that the adoption of stablecoin, you need a leader, and I think US dollar-backed stablecoin is clearly the leader right now to drive that adoption. But I think to a certain degree, I can agree with what Patricia was saying, right? I think there's going to be different rooms to play for maybe a different currency to back it. Now, the way I see the milestone is, I actually feel, your very first question, will there be, a significant impact or growth in the next 12 months? And, everybody here say yes. right? But I think and I think we're awesome to be based in Asia right now because also we touched upon earlier, it's about the adoption, whether it's the technology itself or whether the necessity. And the many panelists here have touched upon, there is actually the necessity element to it. And that element actually plays more in, let's just say, developing markets, right? Whether it's South America, whether it's Africa. And actually, other than the selected, Japan, Korea type of market, we got a huge ASEAN market that is still developing. And that will have huge necessity to use stablecoins, whether it's domestic helpers, right? Moving money back to their home country. Whether it's, for example, it's one of our use cases, more of a business use cases for supply chains and logistics, right? When you make settlement, it has to be done in US dollars, right? When you do cross-border transactions between a buyer and a seller, you don't do it in mostly other currency that mostly done US dollars. And I think that market is huge. The Southeast Asian market, or the Asia market, actually was almost 50% of global GDP last year. And actually contributed over 70% of the GDP growth last year here in Asia. So I think based here in Asia to use stablecoin, I think, I can't even list out a milestone in the next 5-10 years because we're talking about 12 to 24 months and many, many milestones will be hit.
Giorgia, you want to go?
Sure. A few thoughts here for the future. First of all, I do expect and hope that we're going to have clear regulations coming from leading countries to really help the market clear up a little bit, have clearer guidelines, and also really provide more trust in general to these products, right? Which I think, again, there is a bit of a journey there. It was only a few days ago where the news was out that a fairly large stablecoin issuer, that there was some mismanagement of reserves, right? They was not as liquid as they should have been. And they were using auditors, right? They were using Chainlink as well, which is a fairly reputable, is still a very, very reputable tool for real-time proof of reserves, right? So back to Sebastian's point earlier, there's quite a lot to be figured out. So I think there is a lot to do from the trust side of things to get to a point where potential institutional users as well are going to feel much more comfortable using stablecoins. Both because of regulation, but also because of the mechanisms of themselves. I would also hope that, yes, perhaps there could be a distinction between, let's just call them open stable coins and maybe a closed environment stable coins. So maybe some of you remember Signature Bank actually had an internal settlement system that was blockchain based, and they could settle real time, right? Imagine that perhaps you want to have your own stablecoin, like for example, Hex Trust, we have our own stablecoin, right? We don't have the aspiration of becoming, you guys or Circle. We don't need to. We don't want to. But guess what? A stablecoin is profitable. It's a good business. You make money, right? But what if you just had your own stablecoin like we do to benefit our own client base, to make it more efficient settlement internally, right? But maybe you can limit the transferability of that coin. So perhaps there could be a distinction between, again, the open ones, the big ones, and smaller ones which are closed environment. They would still need to, of course, respect certain guidelines, certain rules, but maybe you don't need massive capital requirements in the bank.
Yeah.
Right. So maybe almost like a separate regulation around that. So that's something I hope for. And another thing that I think is going to happen is more local stable coin. So US dollar, sure, always the king, but I think we're going to be seeing more countries just having their own stable coin.
Okay.
So we actually would think that, the manis would develop their own kind of pockets and use cases, and hopefully, regulations would be able to catch up with multiple locations, jurisdiction moving in the same direction. And it becomes something that's, people get used to it, right? It's not something new anymore. And then the kind of interoperability will that happen on it? Because it costs money, right? It's only going to be kind of crisscrossed when it makes sense. Otherwise, you can just turn it back to fiat and then just go back to the old ways. So I think the organic nature in the next few years, it will play out. Some players will, boom, and their the bigger players who stay will have some reasons for crisscrossing amongst their ecosystem, and it just becomes a very standard and normal thing, like how you pay today. Yeah.
Basically, that we don't hear the word ramp on, ramp off anymore, right? Because that's usually what we always hear in a kind of context. Sebastian?
Look, I got a sort of grand unifying view in terms of looking at tokenization, right? I see tokenization, whether it's real-world assets generally or specific use case of like stablecoins, as much like building websites back in the 90s. Right, it will become very easy for anybody to adopt blockchain stablecoins within their own infrastructure in the future, in the next 5 years or so, and we're already seeing that with different banking institutions. And with that, I think in the next 12 to 24 months, you're going to see every bank, if not every major bank, have their own strategy on the stablecoin piece to this. So regardless of the wide adoption of public stablecoins like USDT, DAI, USDC, at the sort of local kind of corporate or sort of closed or semi-closed ecosystems of particularly large global institutions, you're going to see that play out. So I would focus a lot on looking at the headwinds and tailwinds on banking rails, how that would fit within the stablecoin narrative. And then also the, what we're seeing in the regulatory developments, of course, right? At 12 to 18 months, we're going to be seeing a lot of standard setting, right? In terms of how reserved assets, need to be complied with, custody requirements around digital and also fiat, right? Backing the minting of and redemption of stablecoins. So this is really important for the wider adoption of stablecoins. But on the other hand, there's still a lot of headwinds in terms of expanding the regulatory category of whether it's single or basket FRS, fiat reference stablecoins, to things like securitized, right, notes. And if we can have some sort of regulatory recognition around that, that would broaden the adoption as collateral and just wider adoption in the financial system, which we really need for this narrative to push forward.
Okay, I think in the interest of time we can keep it here. I would probably add from my point of view as well to all what you said is I'm looking for that tipping point where this has this aha moment where you said, okay, now I see how this makes from a mass adoption sense. And secondly, for me the question is, how does stablecoin work in a GBA construct with three jurisdictions and three possible views on stablecoin. But with that, thank you so much for your time. I think one of the key takeaways I want to have for the audience that I took on is we're still in early stage, but stablecoins are here to stay. We heard about market cap and all that. Regulation has been picking up, different levels, and some of you, or most of you say it's going to be few rather than many, and stablecoins have different users. There's not a one-to-one approach. It might mean something different to HexTrust as it would be to IDA, as it would be to First Digital, for example. Okay, with that, thank you so much for your time. Thank you so much for listening in.
All right, thank you very much, speakers.